The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, I have an announcement to make, folks. It was just announced on CNN and Fox that all the markets are going to be closed on Thursday for the parade down Broad Street, right by the offices of Duke and Duke, right here at 100 South Broad Street in Philadelphia, Pennsylvania. So we'll have to take a look at these things as we go through. My little 6-year-old grandson, when they told him that school was going to be closed on Thursday, he was so excited, jumping up and down because they told him the parade. And he said, wow, he said, you're pretty excited. He said, yes, no school and a parade. And that's from the mind of a 6-year-old. Anyway, folks, let's take a look at some of these markets. As you probably realize, we're having a little bit of volatility in the markets. The volatility index that was pronounced dead no longer than 1 month ago is now living in Boca Raton, Florida in a new condominium. So I don't know where it's going to go. I do believe with a very high confidence level that we are going to take out those highs from 2009, and that was at 94. Folks, I know you don't think that could happen, but look how fast this thing has gone in just a matter of hours. People are starting to get a bit scared, and as they should, because we had a 10% drop in the Dow in a matter of, 7 trading days from the new moon. Back on the, let's try that again, Larry, a full moon and lunar eclipse back on the first week, last week in January. So that's what we're looking at. Now, I'm just going to give you my 2 cents worth of what I see in these markets. You'll notice the DAX index that we posted first. We had a nice pattern there that has sold off. We're down to some pretty significant support this morning, and that's what it is support. And remember, these things can disappear, very, very quickly. The next one we want to look at here is the DAX index. Let's try it again, Larry. This is I had a very rough day yesterday as far as technical stuff. My laptop died on me. My Cadillac, which is under warranty, something happened to the electrical system, and I had to take it in and get it fixed. It was just a small thing, but boy, these electrical things, when they go bonkers, it makes it a little crazy. Anyway, we got it all taken care of. Let's move on to this next chart here on the FTSE that I wanted to show you this this big ABCD pattern that we had up here, back in early mid-January. That, I believe, was the new moon at that time for the FTSE. Now we've come down and we've made a 61% retracement, folks, in the FTSE. With that big down day yesterday, we hit that just a little below 7,100. That was down 10%. Both of these markets, the S&P, the Dow Jones, and the all the markets came off 10% for the fact that we had this big move yesterday. Folks, I happened to be in the dealership yesterday, and I happened to be watching, which one was it? It was Bloomberg, and I was watching the market in the stock market for the Dow Jones, and I was seeing that, we were down sharply, down about 350 points. We rallied to be only down about 70, and then I just quickly looked up, and it was down about 180. When that happened, I didn't have any charts to send out because I was flying blind, but I just calculated in my mind if we made a new low, it was going to be really, really bad. And once we went below 450 in the Dow, I realized that this is bigger than any move we've had, folks. And remember, we said a couple weeks ago that our first big move was 350 points down. We said it would do 168% of that, which we did at 550. Once we went below the 550, we did 1.618 of that. That took us down to 1100. We did 1.618 of that, and it took us down 1600 in the Dow. And that stopped at a pretty significant point, as we'll show you just a little bit later. But these are just technical things, folks. I don't know diddly squat what caused it, what's going on. I really don't know. All I know is bonds are as nutty as the stock market, and that's telling you that volatility is here to stay. Even if it backs off a little bit, volatility is here to stay. Folks, people are starting to get scared, and they haven't even been scared yet. I mean, this is just a shot across the bow. Say, hey, look at me. And what it is, I don't know. I really don't know. All I'm doing is watching the charts intraday, trying to find a spot that looks like it's very, very interesting. So what we're going to, let's just like, I think it's, I actually know who caused all this. It's Puxatawny Phil in Puxatawny, Pennsylvania. He's the one that is behind it all. All right, let's take a quick look at what happened to some of these markets last night. I just want to give you a pretty rough idea. Here is the just to give you a rough idea of some of these things that we're watching here. Hold on one second, and I'll put these up. And I try to put them in order, but God only knows if she's going to let me get them in order or not. This is the E-mini yesterday. The thing to remember is if you'll look at that high up there at that 28.38, once we went below 28.11, that was the key that we were getting ready to break really hard. We went back and tested it one more time. The reason why I say that is we brought this yes, that is correct. You're absolutely right, Gator. The next drop could be 2,500, which is 1.618 of 1,600. Now, 2,500 is only 10%. Remember, on the big crash back in October of '87, that was down 33% in one day. So remember, that's it. We'll see what's going on here. But let me try to get to some of these things that are happening. I wanted to bring this to your attention because it was very important. This was a chart that we brought from one of our friends across the pond. In fact, we brought this in right after the top was made, and we brought this to your attention, showing you that after that top came in at the 28 and change level, we came down and we made a beautiful ABCD pattern up at that 28.24 level. And then if you look down here, where the 28.1175 is, once we took that out to the downside, folks, that set up the first ABCD pattern that came down to 27.69, I believe, and then we went sideways for a little bit. And now here's the $64 question. If you want to, sell, Mortimer, sell. You're absolutely right. Anyway, there'll be plenty of time for that. Anyway, if you'll do the work yourself, this is your homework assignment, boys and girls. I get on these charts every day and I look at them and I tell you things. I know 99% of it goes over your head because it goes over my head. But the main thing, turn the machines back on. You're absolutely right. Anyway, what you want to be watching here is the retracements. Go back on your 15-minute chart and do the retracements on the E-mini and watch the 38% retracements that we had. We had one yesterday, boys and girls. And we've got another one forming right now. So it's going to be interesting, what we see. But do the work yourself. Go back and look at those. You'll really learn a lot as you're starting to see some of these things unfold. Okay, let's take a look here now at the at this E-mini after we made that bottom. I'm going to blow this up a little bit. From the bottom we made, and we're having huge swings, folks. This is really good stuff. Wow, the first break already. Shut the front door and raise the rent. I'll be right back talking about the E-mini S&P.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we have a question about margin calls from the exchanges that came in yesterday with the market down about. If you'll bear with me here just a second here, I was watching it on TV, and all I know is that once we went below 700, if you'll go back and do the work yourself, like Jim Twentyman says, defy human nature, you'll see that the move between 700, minus 700, and minus 16, almost 1600, was basically straight down with hardly any upticks. Folks, that is when the algorithmic trading kicks in, and there's just no buyers in there, and they're fighting, they're selling at lower prices, and since we don't have the uptick rule anymore, that's what causes that. Then we hit 1600. Folks, we rallied 1,000 points in the Dow right after that. So you're seeing the volatility. It's just it's just raising its head. Say, hey, look at me, I'm back to play. So keep an eye on that. The margin calls will not be a problem, I don't believe, until we get a period, because a lot of these people, if they're long this stuff, they still have huge really big really big proppers. The second question that Tucker's asking, is liquidity an issue? I really don't think liquidity will be an issue in the commodity markets, the stock markets, because of all these ETFs. I don't know, because these ETFs, I really like Warren Buffett said, they're weapons of mass destruction, and then we have options on ETFs. So I really don't know if that will be a problem. All I know is the fact that this market has shaken the tree like it has is a very, very important thing. If we take a look at this, I want to bring up this really long-term monthly chart that was sent by the same gentleman that sent us the chart on the important price of 28.11 in the S&P. We'll be able to see here that we had this big ABCD pattern completing up there around 28.68, and we're trading at 25 and change now. So we've come down about 10%. It's not the 10%, folks. It's the fact that it did it in 6 days. That's what's important. That's what's important. Before, the little pullbacks were, really big. Yes, Marshall, you're right. The CD leg will be the one where you'll possibly get margin calls, and you'll begin to see those before they occur. And the reason why you'll start seeing ranges expanding. I mean, we expanded to 1,600 Dow points yesterday, which is an all-time record. But, folks, that is not really an all-time record. The old record down was 777 when Lehman Brothers was going under. That was back in 08, 777. We were twice that yesterday. And it meant nothing because we were only down 6.5% in one day. So it's the percentage drop that's important. So just pay attention now. We're going to start to see really big volatility. Hopefully the folks here, who goes under this time, I know the answer to that one, Duffy. It's going to be Deutsche Bank. And Deutsche Bank is the one we've mentioned it several times. The fact is, I think I was going to bring that up on the thing today. Hold on a second. I think I had Deutsche Bank listed as one of the things I wanted to talk about today. If the trading gods were with me, and I don't think they are today. So, I think maybe they are. Oh, no, that's not it. Nope, I don't have the Deutsche Bank. I'll do it. Oh, wait a minute. No, that's a gold, because gold's getting ready to break too, I believe. Anyway, let's move on here to this S&P and finish it up here because we need to find out. I blew this S&P up from the last chart that we did. This was done about an hour or so ago, and I wanted you to see here that the S&P came down and touched that 2575 again one more time. That was a 61% retracement. That was a perfect Gartley. And after that Gartley was made, believe it or not, it rallied. Hard to believe. 45 handles, $2,000, and then came back down $2,000 to test it again. So if we go below the 2570 level, we're most probably going to come down to the 78% level at 2855. Remember, these swings used to be 5 and 10 points. Now, yesterday's low was 2530, folks, and we rallied overnight 110 points to 2646. These are not times for the faint of heart. So the good part is if you move your charts down to 15-minute in these types of markets, you can still find relatively, places to take a look at it. So it's very, very important. The gold market, let's just take a look at it. It looks very bad, boys and girls. Let's just get this up here. Getting too excited today. I missed all the markets yesterday. I'll wait till something's going on, and then they always do something. Anyway, we'll look here. You'll see that this is the gold over the last few days. We already remember that importance of that 1366 level. That was a double top. Silver was making a 78. Yesterday during the debacle there on the stock market, we got up to a perfect 78% level. 1349, and you can see what's happening. We're trading around 1337 and change right now. That tells us that we're most probably going to take out the lows, 1324, and that takes us down to between 1324 and our bigger target is the one we're really looking at that comes in around the 1311 area. Because of the fact that if these markets continue to get hit, buying power dries up, folks, because the people on the short side are the ones that are making money, and believe me, it's not the public that is on the short side. Most of the people don't even understand what short selling really is. Anyway, it is really it's something we have to pay close attention to. Silver's even acting more bearish with the rally we had in gold last night to the 78% level. Silver could only manage a 382 rally, so it's not looking good in the gold and the silver, right now. So let's pay a little bit of attention to it as we look at some of these things. I'll get to Treasury bonds in just a minute, but I wanted to talk a little bit about the Bitcoin. If you'll remember here, we were looking for Bitcoin to get down to the ABCD level and around, let's just get this puppy up here so we can see it, to around a little bit below the 8,000 level. And let's just get this up here so we can take a look at it. And then, of course, we hit that bottom. You'll notice the little ABCD pattern where the market rallied just about 2,000 points up to just under 10,000, and then down she came. And here's what we're looking at now for Bitcoin on a little bit bigger move here. This is a longer-term move going back several years, and we'll take a quick look at it here if we can. And hold on one second here. We'll get this up here. You'll see the Bitcoin. We have a really strong support at around 5,000. That's a 78% retracement from the low at 500 back in the middle of last year. The beginning of 2000 and November of 2017. So watch that one. That's 5,000 is what we're looking for in that area. But it's been once we broke below the 7,000, folks, that told us that most probably we're getting ready, to move a little bit lower. Okay, someone's asking a question about lower prices in some of these things. Folks, I don't know. All I know is this is maybe the first day down. The worst thing that can happen to the bulls is to have a really quiet I don't see quiet here because of the volatility, but if we have just a little meager 3 to 5 day rally and it goes nowhere, like Tuesday, Wednesday, Thursday, Friday, and then we close lower on Friday, then you got to be careful, because then you're looking at something could be, really, really moving. In fact, folks, the volatility index moved 5 times in 4 days. It's up quadrupled. We've been waiting for that. It's happening, so let's sit our hands and see what happens here. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I wanted to bring up the chart of Deutsche Bank. We've talked about this several times. but this is the updated version. You'll notice here that back in January, Deutsche Bank came out and offered the stock at a 35% discount. Wow, how nice of them. And a 35% discount, you'd still be underwater. As you can see with these gap downs, it looks like it's going to go a little bit lower. We watch Deutsche Bank because it is so involved with the derivative market. No bank in any place, China, wherever, has more exposure to counterparty risk than Deutsche Bank. That's where the liquidity problem could possibly come in, David. If you watch Deutsche Bank, because if Deutsche Bank gets below 11, Deutsche Bank is toast, as they say in the trade. So take a look at it. When you're watching these Dow numbers that you're seeing, Duffy, remember that the overnight market, we're trading in the Dow E-mini, so you're going to see big swings. I mean, it's nothing. I was calculating the swings this morning. We have swung 800 points in the Dow just in the overnight trading, boys and girls. And as I mentioned before, watch these numbers that we're watching at in the S&P, because if we break 2573, which is the 61% Gartley, then you're going to look at 2855. Let's just double check to see what we're doing here. So far, it has held that perfectly. We're trading at around 2598 to 2600 right now. And the ABCD structure on that, and I think I put this up here, let's just double check it, because we could easily be up 100 S&P points today. There's not a problem. Let's just get this so you can take a look at it. Here's the Gartley pattern. You'll see it forming, and you'll be able to get a quick look at it here. That we've held this 2573. We're trading around 2600, but this doesn't show the last pullback that came back down again to 2573. We're now trading at 2600, and we could easily move 90 points higher just from short covering. Just keep in mind, folks, that the shorts are scared to death. What we want to be watching for as traders, and here again you have to defy human nature and do the work yourself. Watch for these ABCD patterns. That's where your real help will arrive. Now, in the bond market, let's take a look yesterday in the bond market. The bond market broke quite a bit. We got all the way down to 44 in the Treasury bonds. Remember that our longer-term price objective on these bonds comes in around 137. We then rallied 3 handles, $3,000, basically a flight to quality. And so what we're doing now is we're watching to see, what happens in the bonds. So the thing that you want to be watching in the bonds is just like we were watching in the S&P, is to take a look at what happened on the hourly chart, and we'll refer that again to Mr. H.M. Gartley, Profits in the Stock Market. You'll see the bottom that we made there at 144.06. We rallied actually $3,500 up to an exact 50% retracement of the high made a week and a half ago. And since that time, last night and today, we're making a perfect Gartley down here at 145.04. Now, it's coming down very quickly, but if it can hold that level between 145.16 and 144.28, if it can hold that level, then it's got a little bit of a chance where interest rates could go into holding pattern for a little bit, be able to see, if that is going to be the case. Yes, Jesse Livermore was a great seller. He was experienced at short selling. Jesse Livermore's problem wasn't in trading. His problem was with women. He was in love with too many women at one time, and that's what caused his ultimate big problems. But anyway, short selling is back in those days they had rules against short selling, but those rules are no longer pleasant. You don't have to have an uptick in order to sell short, and that's what causes these people that are doing the automatic trading. That's what brings in the problem. A lot of this that we're seeing here was covered in the Glass-Steagall Act from 1936, but Mr. Clinton repealed that. So we're back in shark-infested waters, and we must protect ourselves at all times. So make sure you have your wetsuit on if you're out there, and always use stops, folks, because, my God, these things are, they're so wild. It even scares me, and I'm fearless. So watch it, because the markets do act nicely, even with this wild volatility. Go back and, study the charts from yesterday. Hold on, my alerts are beeping everywhere. It's probably the gold. Yes, gold's breaking down. just as we were expecting. We're trading at 1333 now. I believe we're going to hit somewhere between 1321 and probably closer to 1312 here in the next few days. We're starting to move higher now in the S&P. We got up to 2625. Right at the 78% retracement of the overnight high. If we can clear this 2636 level, we'll be looking at 2689 as a potential high. The bonds are now trading at 145.28. Watch them very closely, folks, at 145.16. That could be a very important bottom. And here again, I'm looking at short-term charts, so don't don't get attached to the things that I'm telling you. Like Twentyman says, defy human nature. Do the work yourself. Okay, I wanted to give you one other alert that I think is relatively important, and that is to take a look at, well, there's two things I've got to cover here. Wow, I had so much to do today. Yeah, this is the one. It's the banking index. Give me 1 second here so we can take a look at this banking index chart so you'll get an idea of what we're looking at here. See, this banking index chart had a big move down yesterday in the tune of not even 10% yesterday, but it held relatively well compared to the rest. So keep an eye on that banking, because that's where the money is. And so watch that. If you start seeing problems there, those problems are going to be, coming into other areas. So, yeah, I see, David, that Amazon is positive. It's always positive. So who knows? Anyway, these markets are going to be trading, so just be patient. And it does follow the patterns and the ratios, and this volatility is something to be thankful for, because this is where you can really do well. The main thing is to watch these swings that we're having. Look at the swing yesterday, 100 points up and down in the S&P. That's a 200-point swing, folks. Hello, that's $10,000 in 24 hours. Buy the low, sell the high. Anyway, we're getting great volatility. So this is what we'd like to see. All during last year, we had no volatility. And now volatility is, back in play. So just keep a close eye on it. It's going to go up and down for sure, but I believe we're heading to plus 90 in the volatility index. Folks, if it can move 5 times in 6 trading days, it can certainly, go to areas where it's never been before. So just remember that. Now, I've got a really interesting chart here from one of our good folks up in Salt Lake City, Utah, that sent it to me. I wanted to bring it to your attention, but unfortunately, I think we've got the break coming up, and we will come to the break here. And then when the break comes back, we will bring this chart up. And you should, because it is, like Hannity said, this is monumentally mind-breaking. Stay tuned for the next announcement. Anyway, what we'll do is we'll take a look at this when we get back, but it's going to be an interesting chart that shows similarities that are quite interesting of intermarket relationships. But we'll be right back with the chart, the mystery chart of the day from Salt Lake City, Utah, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, without further ado, we are going to bring up the mystery chart for the day. And just give me 1 second to get it ready. I'm almost ready to go. And here it comes without further ado. This is the chart of the Dow Jones Industrial Average as it relates to palladium. Now, if you'll notice here, it is really an amazing, because we've made a double top now, as you can see in palladium, and we've made a 3 drive to a top pattern, as you can see, of course, in the stock pattern. So that's the main thing that we want to be watching here, that there's a high correlation. Whether that means anything long term or not, I'm not really sure, but the chart is very, very interesting. I've never traded palladium. It's a metal that is used very extensively in electronics and fuel cells and dentistry, medicine. It's got a lot of uses, but I don't know anything about it, and I've never traded it. So we'll see what's going on right now with some of these things. So let's see how our S&P has now broken 2650, folks. We're right there now. That sets up that ABCD now 40 points higher, 2689. Let's just see if it gets there. Remember, these are only probabilities. They're nothing more than that. So we'll bring it up here to take a quick look at it. And at least it stopped right where it should have. Folks, it's rallied 70 handles since it made the Fibonacci number. That's $3,500, in a matter of, an hour? So we're getting a lot of volatility here. So we'll keep a close eye on this as we go through. The bonds have held up to that level that we were looking at. We're almost down to the Gartley pattern at 145.16. We're only 9 points away. That's, very, very close. So we'll watch this very, very close also. Now, the fact that we took out that old high at 2649 in the S&P could just be, another test, just like it was down. We need to get it. Well, it's starting to move now. This is what we want to see. Now we're only 35 points away. Any market that can move 100 points up and 100 points down, like we did in the S&P yesterday, can do any darn thing it wants to. So, rely on your technical patterns and, try to, limit your risk as best you can. I don't see how you can trade the S&P for less than 10 points. In the situation that we're in right now. It used to be you could do it within 5 or 6 points, but now with the volatility like it is, I just don't know how you can do it under 10 points, which is $500, and that's only 10% of the margin that's being used. And I don't believe they've changed the margins yet in the indices, but that could happen. At any time. We don't know if that's, I haven't seen it yet. So at least I know Goldman Sachs hasn't done anything, but they usually they're usually more scared than anybody else. Someone has asked a question about that banking index, folks. The only reason I bring that up is because that's where the money is. And if you remember Gordon Gekko, follow the money, greed is good. That's where you really want to, take a look at. And if there's any really problems, you'll start to see it in that area. We see the big gap down, the wide range down. That's the first shot across the bow. Now, what we want to watch now is to see what happens between Tuesday, Wednesday, Thursday. Because if this is a small 3-day rally, and that's all we're going to get, then you're looking at something that is going to be, quite ominous. So that's what we want to keep our eye on. And at any time it could give up the ghost. A news announcement could come out, and anything could be. They could recalculate the votes and realize that Hillary actually won by 10%. Who knows? Crazier things have happened in the world, but anything's possible. Now, one second here, boys and girls. Someone's asking me another question that I want to be able to answer about the U.S. dollar index. We've had a nice move in the euro from the downside that we posted just over the weekend. We got down. We broke 23 and change. Hold on and get this up here to take a look at it. The VIX has went from 50 to 26. You're kidding. You got to love it. Is that correct? It went from 50 to 26? Well, there is volatility in the markets. Yes, I believe it was. I don't know. I don't believe it was Ivan Boesky that said that, David. I believe it was in Gordon Gekko's movie Wall Street, and that's what I believe that it was. And but anyway, can you check to see if that VIX was at 50? Because I just heard someone on TV said that it reached 50, because that was a 61% retracement from the high at 90. I believe that VIX index is going to go to above 90. That's where I think it's ready to be going. Yeah, 50 was the high, so it's given up 50% of its gain here in 20 minutes. So that tells you the bottom in the market most probably is at hand, and we'll see. Maybe it'll go up and make new highs. That would really surprise everyone, including me and a lot of other people. So we'll see what happens. Let's see how we're doing here. We're still trading up at this 26.49 level. We just took out those highs from last night after we rallied 100 points. We dropped from 100 points. We dropped 80 points down to the 61% retracement at 25.70. If we do the ABCD structure on that, you add 100 points to that low at 25 and change, 25.70 and change, and the ABC number comes in at 2890. That's 50 points, 40 points from where we are, 41 points, 39 points, 37 points from where we are right now. So it's most probably going to get there. So watch that big ABCD pattern forming, because it's really it's going to be a really interesting one to pay attention to. The question that someone's asked about the Canadian dollar. We've been really friendly on that for quite some time. We made a beautiful 78% retracement on that just on Friday, and since that time, we've had 2 monster days to the upside. We're already trading above the 125 level, so that tells us that we're going to go a great deal higher than that one. That's the main thing. If you notice that high we made back in April, we had that beautiful ABCD pattern up there at an exact 61% retracement on the daily charts. That was one of our better trades of the year last year, was in that Canadian dollar. And now it looks like we're getting ready to make a potential ABCD here on the Canadian dollar that would take us to the 131.40. That's 6 handles from where we are right now, which is quite a bit. So we'll see. Okay, Steve Rhodes says a greater than 10% the VIX seems to be. We now have a 35. It's down 35% from the high. That's about right. That 38% retracement, I guess. I don't know, but it's crazy. You're starting to see some wild stuff. That's the main thing. When that thing quadruples like that in 6 days, I think that's a heads up. Pay attention. Somebody's out there that's doing something a little bit differently than what we usually expect. So we'll watch it closely here. But watch the number. We'll review this tomorrow, of course. This number 2689, 2690 in the S&P, and if we go substantially above that, say back to above 2720, then maybe this was a major bottom. and the greatest buying opportunity since October the 19th and 20th of 1987, which was the best buying opportunity of that decade. That's even better than the low of August the 9th in 1982, because we were in such a strong uptrend. And that was when the Dow hit 1,600. And then, of course, in 2009, it hit 6,400. And, of course, the high so far has been 27,000 and change. So we'll take a little break here. 877-927-6648.
You don't buy into that nonsense, do you? You know, you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental, so I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, folks, we've just rallied 20 points since the break, which is 5 minutes. We're now at 26.76. Our profit, the blah, 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 blah. The target on this is 26.90. We're only 25 points away. So by the time I finish this 4-minute segment, we'll probably be there. Now, we've had this really strong move coming out of this area, so pay attention to it. Another one that is really looking interesting from potential Gartley pattern is the Treasury bonds. We are right at the almost at the exact 61% retracement at 145. 18. The number is, I believe, 145.16. So the risk here would be relatively small. It's just a Gartley pattern. I don't care whatever you want to call it or not, but that's what the pattern is. I don't know whether it's going to work or not, but if you did the one on the S&P, you should do the one on the bonds, because they're just patterns. That's well, that's really what we're looking at. So that's all they are, is patterns, boys and girls. I don't know diddly squat. That's really all I can tell you, no more than that. Okay, now another question someone's asking me is what will happen to the gold? I thought I covered that. I believe we're heading down to at least the 1320 level. That's $14 from where we are right now, but a higher probability takes us to around 1312 to 1300. That's that longer term pattern that we're looking at. By the way, the bonds hit 145.17, and that's really close. And whether that's going to happen or not, we'll wait and see. But it's the same pattern in the S&P, only just different things. There's either chocolate cake or white cake. I don't know what you want to look at. At the S&P right now, we're right at a 61% retracement of that mid-afternoon high before we totally collapse. But with this big move, it looks like we're still going to hit the 2690 level. We're only a heartbeat away. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!